is I think over the next couple years, most assets outside the United States are going to come under extreme pressure. So we have a number of short positions, meaning we're betting that prices around the world are going to fall, foreign currencies are going to fall, foreign stock markets are going to fall, emerging market bonds, some international market bonds will fall as those governments are not able to meet their demands. And then, so that's what we're doing on the short side. On the long side, we've got short-term fixed income, U.S. fixed income. Basically, think on a relative basis, U.S. fixed income will do better than emerging market and international. And then we do have exposure to U.S. stocks. Again, they're hedged right now because I think there'll probably be another pullback before we run to all-time highs. But I think in the next couple of years, U.S. stocks will go to their all-time high. And I think valuations will become even more extreme than they are now. Not because things are good, but because things are bad and people are fleeing to U.S. large blue chip equities as a relative store of value. And I think that happens because I think people will start to sell foreign bonds, and they may even start to sell U.S. treasuries at some point. And when assets start to flow out of the fixed income markets, which are much bigger than the equity markets, it's got to flow somewhere. You know, individuals like you or I, Mike, we can just sit in cash and go to the sidelines and not worry about it. But big institutions, the mutual fund managers, the endowments, the hedge funds, the pension funds, they can't just sell everything and go to cash. Their mandate is to invest it somewhere. And I think when that happens, U.S. equities will be one of the places they go to. So I think we'll kind of have this big, spectacular blow off top in U.S. equities over the next couple of years, and then it will all reverse. Then I think U.S. equities will go down, and foreign equities and emerging markets will start to rise out of it.